We're just going to have an overview of the coming week and see what we have in store for us. As usual, we start with the economic calendar at dailyfx.com/calendar. And we'll start with Monday. You can see today it's Monday the 31st of January. We've got the Canadian GDP report due out at 1:30. And on Tuesday, we've got manufacturing reports from China due out at 1 in the morning. At 3:30 in the morning, we have the Australian Reserve Bank interest rate decision. That's at 3:30 in the morning on Tuesday, just looking through the week. And on Tuesday also, we've got at 3 o'clock the manufacturing report from the USA. Wednesday, there are no reports of high importance. And Thursday, we have the European Central Bank rate decision at 12:45. And on Friday, we have the big one, the US non-farm payrolls, the unemployment rate decision at 1:30 on Friday. So we've got quite a few reports of high importance throughout this week. But we'll take each day as it comes from a day trading point of view. So we'll start from today, which is Monday. So today, Monday, we've got the Eurozone Consumer Price Index due out at 10 o'clock this morning. So that will probably affect the Euro-US dollar. We've got the Canadian GDP report due out at 1:30, and that would affect the Canadian US dollar. And we've got quite a few reports of medium importance due out at 1:30 from America, which could have an impact on the markets. So that's today. So let's go to the charts. So start with the Euro-US dollar. We've got the 1-year daily chart. As we can see, the market was initially trending sideways, and now it looks like it's beginning to trend up. It's made a high there and a low. It's gone up, made a new high. And that looks like now a new low. So that's a higher high and a higher low, which is an indication of an uptrending market. So from a swing trading point of view, I usually use the Fibonacci retracements. And as we can see, the market is in between the 23.6% retracement and the 38.2% retracement. So at the moment, there are no clear swing trading opportunities. So go down to the 2 days, 5 minutes chart. And we can see here that the market is sort of trending sideways since midnight. And we can see here where the market fell, made a low at that point. The low there was 13,571.9. And then it's gone up, come back down, made another low there at 13,570.6. So that you can see the market had formed a support there, because it formed a low there, went up, came back down, tested that low held, and it went back up, so it's formed a support there. So I've got a sell order just below the support of the market. So if the market does fall and breaks that support, I'll sell just below the support of the market. And obviously I'm using also the pivot points. So the market keeps going up, I'll buy just above the pivot point. So if it breaks the pivot point, I'll buy just above the pivot point. And you can see the pivot point is clearly outside the sideways trend of the market. So that's the day trading from the Euro-US dollar point of view. So I have a pending buy order just above the pivot point and a pending sell order just below the support of the market. And I'll just keep out in between and keep out of trouble from the sideways trend. Let's have a look at pound dollar. Again, you can see pound dollar is trending sideways, just trending sideways just above the 23.6% Fibonacci retracement. This is a 1-year daily chart. So there are clearly no swing trade opportunities here. Okay, from a day trading point of view, again, we can see the market trending sideways. That's the low of the market at this point in time. The low there is 15,821. But that low hasn't been tested yet, so we'll wait and see. So I've got a buy order just above the pivot point. And let's see what happens to that. So I've got a pending buy order just above the pivot point, and I don't have a pending sell order. I'm just going to wait and see what the market does when it gets to this previous low in the market. Have a look at FTSE. That's the FTSE 100, the 1-year daily chart. The market broke the moving average 50 on Friday. So I sold when it broke the moving average 50 on Friday from a swing trading point of view. So that's a swing trade using the moving average 50. So if you're using the moving average 50 as an indicator for your swing trading, you could have sold on Friday at that point. But at this moment, there are no clear swing trading opportunities. A good opportunity was on Friday. So from a day trading point of view, again, you can see the market has been going sideways. So I've got a buy order just above the pivot point and a sell order just below the first support. And I'm just going to keep out of the sideways trend of the market. Again, I've drawn a line just at the low point of the market, and then see if the market tests that and see if support forms at that level. But at the moment, that's just a low point in the market. So I've got my sell order just below the first support using the pivot points, and a buy order just above the pivot point. So that's the plan for today, and we'll see how the trading goes.